Copper just posted its biggest weekly jump in a month. Christmas lights surged 3.33%. Aluminum rallied on green energy demand. Brass climbed on HVAC demand. But here's the shocker. Steel stayed locked flat because of tariff chaos in Canada. Let me break down exactly what this means for you, your yard, and your wallet. Happy Friday, Carol from ScrapMonster here with your weekly scrap metal price report for November 28th through December 4th, 2025. Today we're looking at North America only. For Europe, China, and India, you can see the full breakdown of today's report at scrapmonster.com. Let's lock in the winners, spot the trouble, and find your edge for next week. Copper stayed in the driver's seat this week with multiple grades pushing higher and one category jumping more than 3%. All three major categories climbed. Number one, copper bare bright up 1.35%, up 7 cents per pound. Number one, copper wire and tubing up 1.38%, same 7-cent jump. And number two, copper wire and tubing is up 1.41%, and it hit $5.04 per pound on the Midwest. But the real star, Christmas lights. Seasonal electric wire used for holiday lighting and industrial installations shot up 3.33%. That's the strongest single category gain all week. Why? The LME copper futures are sitting above $9,500 per metric ton. LME copper has been trading at or near record highs around the $11,200 to $11,500 per ton range into early December as mine disruptions and smelter cutbacks squeeze available metal. Green energy infrastructure is booming. Recyclers have tight supply. It all adds up to real money on the table. The quick market driver, supply is tight globally. Deutsche Bank just forecast copper hitting $10,600 per ton average in 2026 with peaks above $11,000. That's going to lift North American scrap prices higher if supply stays constrained. Why the move? To give you some context, when primary copper is this expensive, scrap becomes the cheapest feedstock. Smelters and refiners turn more aggressively to scrap, which lifts bids on clean grades like bare bright number one and number two wire. At the same time, robust demand for wiring, motors, and electronics keeps motor starters, sealed units, and Christmas lights well supported. Sort out those Christmas lights. If you're collecting mixed copper wire, the heavy insulation holiday industrial wire commands a +5 to +8% premium over bulk wire, segregated into 10 to 25 pound bundles. Buyers will bite instantly. That premium goes straight to your margin. Aluminum had a recovery week. Mixed aluminum turnings jumped 2%. That's the biggest aluminum mover. Here's the breakdown. EC aluminum wire was the most stable, up 0.78%. 6063 extrusions up by a penny. Old cast engine blocks and radiators up 1.19%. UBC up 1.18%. 6061 extrusions up 1.3%. 1100 scrap up 1.02%. Why the rally? Aluminum futures jumped on two things. One, expectations of lower U.S. interest rates in 2026, and two, Chinese government stimulus for property construction, plus automotive lightweighting demand stays firm. EV makers need lighter bodies to boost range. Recyclers are feeding that demand. Why the move? Turnings and extrusion grades tighten quickly when machining activity and fabrication orders pick up. With EC wire, 6063, and old cast all ticking up together, it suggests steady mill and remelt demand, not just one-off spike. Get a magnetic separator, aluminum scrap mixed with ferrous, takes 5 to 10 cents per pound hit on pricing. Buy a basic $500 magnetic sorter and pull iron from aluminum. Run a 5-ton batch through it weekly. That's 7 cents per pound savings on 5 tons. That equals $700 extra revenue per week. Your $500 tool pays for itself in less than a week. Do this. Brass and bronze didn't just follow copper. They posted broad, clean increases across the board. The overall brass and bronze basket is up 1.59%. Red brass is up 5 cents per pound. That's 1.55%. And yellow brass is up 5 cents per pound, 1.63%. What's driving this? HVAC season. Heating systems are running full tilt in December. Radiator replacements spike. Plumbing contractors are rushing winter repairs before freeze conditions lock in. That demand is real, and it's boosting brass prices. Brass is riding the combination of higher copper prices plus resilient demand from plumbing, fitting, and industrial applications. Global brass demand is projected to keep growing strongly over the decade, which supports long-term scrap appetite. Why the move? When copper rallies, brass follows. Fabricators will need alloy feedstock, and with primary prices elevated, scrap brass becomes the logical alternative. That's why you see red and yellow brass moving almost in lockstep across all three U.S. regions. Grade separation pays big. Red brass has 80 to 85% copper content, so it's worth 10 to 15 cents more than yellow brass. Take 15 minutes to visually sort a mixed brass batch. On 1 ton, that's $300 to $450 in extra revenue. Do this in every batch. In North America, lead prices saw no weekly change. Scrap auto batteries remained flat at 24 cents per pound. And zinc stayed flat. New zinc die cast is flat at 83 cents per pound. Old zinc die cast is flat at 70 cents per pound. Die casting demand is balanced. No supply shock. Hold steady here until we see Q1 automotive ramp in January. Lead and zinc are behaving like steady ballast right now. Battery and die cast demand haven't shifted enough to move scrap bids, and most buyers are comfortable where inventory sits. With flat pricing, the win comes from volume and contamination control. Keep battery loads free of trash, liquids, and non-battery material so you don't get docked, and don't sit on zinc die cast for months hoping for a miracle spike. Here's where the trouble starts. Steel is locked flat. Number 1, HMS at $315 per metric ton. Shredded auto scrap flat at $360 per metric ton. HMS 80/20 saw no movements, and number 1 busheling is at $380 per metric ton. Why? 2 words: tariff chaos. Tariff bomb. Canada just announced a new 25% levy on steel derivatives effective December 26. That covers 10 billion Canadian dollars of goods. Wind towers, prefabricated buildings, fasteners, wires, steel pipe fittings. What this means for you? Scrap that would normally flow south to US mills might get rerouted to Turkey or Southeast Asia to dodge the tariff stack. That's going to shift regional pricing unpredictably. Also, Algoma Steel, Canada's 3rd largest producer, just announced 1,000 job cuts effective March 23, 2026. That's a supply-side weakness signal. Mills are nervous about tariffs, so they're buying cautiously. Expert insight: the U.S. ferrous scrap market remains broadly neutral, with the trend indicator dipping to 47.9, implying a modest around 1% month-to-month price decline is expected. What to do? Don't chase steel pricing right now. Instead, secure mill contracts now before December 26 tariff clarity hits. Stainless steel, quiet but steady. 304 stainless steel solid flat at 61 cents per pound week over week. All major steel scrap categories saw no change. Food processing, chemical handling, and specialty industrial demand are stable. No disruptions, no policy shifts, just steady, predictable business. Best practice: ensure your stainless lots are clean and segregated by grade. 304 stainless steel solid, the workhorse, commands consistent buyer interest. Buyers reward consistent supply, so maintain your quality standards. A dirty mixed stainless batch takes a 5 cent to 10 cent per pound penalty. So let's zoom out. 4 big things are shaping scrap prices right now. 1. Futures markets. LME and COMEX. Copper futures are sitting above $9,500 per metric ton, up 27% year to date. That LME strength lifts our scrap prices. When futures rise, mills bid higher on scrap as feedstock. Simple as that. Deutsche Bank just forecasted copper averaging $10,600 per ton in 2026, with peaks exceeding $11,000 per metric ton in H1 2026. If that forecast holds, North American copper scrap is going higher. 2. Tariff headwinds. Canada's 25% levy on steel derivatives December 26, plus the ongoing US 50% steel tariff since June, create uncertainty. Mills don't like uncertainty, so they're buying cautiously. That's why ferrous stayed flat. Watch for this to resolve in January 2026. Once clarity emerges, expect either soft prices if scrap gets rerouted away from US mills, or firm prices if domestic mills lock in supply to avoid tariff chaos. 3. Green energy and EAF expansion. EAF steelmaking, electric arc furnace, is growing rapidly in the US. EAFs are 100% scrap feedstock. The US scrap metal recycling market is forecasting to hit $18.5 billion by 2035, a 5.5% annual growth rate. Long-term structural tailwind for scrap prices. 4. Seasonal slowdown. December is traditionally quiet. Lower scrap collection rates, fewer vehicle sales, battery and die cast demand drops. This supports flat to soft pricing near term, but January usually brings a bounce. In the global context, China in November manufacturing PMI is at 49.2, contraction territory. Weak demand signals, but Indian and US demand offset. In India, copper is up 6.76%, aluminum 3.43%, brass is up 3.78%. In Europe, tariff uncertainty is similar to North America. Expect cautious buying pattern. All right, here's your takeaway. The winners of the week: copper, especially Christmas lights, up 3.33%, aluminum mixed turnings up 2%, brass and bronze up 1.5 and 1.7%. Our flatliners: lead, zinc, steel, and stainless. Your 3-move action plan: 1. Sort copper. Christmas lights equals up 5 to 8% premium. Segregate, bundle, sell separately. 2. Magnetic sort aluminum. $500 tool, 700 weekly ROI. Do it. 3. Secure mill contracts now before tariff clarity hits December 26. Lock in volume, lock in loyalty. This report covers North America only. For Europe, China, and India, and global markets, visit ScrapMonster.com. For live daily prices, charts, and historical trends, head over to ScrapMonster. Use the Yard Finder to compare offers near you and tap into the marketplace if you're trading larger volumes. And if you want ad-free real-time feeds, check out our premium and pro tools. We do this every week, so if you want consistent weekly market context, make sure you're subscribed and turn on your notifications so you don't miss next week's weekly report. I'm Carol from ScrapMonster. Stay safe, sort smart, and get paid what your scrap is really worth. Next week, we'll track whether copper holds the strength and whether tariff clarity shifts steel pricing. Questions? Drop a comment below, and I will see you next week. Bye-bye.